If you think you need thousands of dollars to start investing, think again. The truth is some of the most successful investors started small. And today, I'll show you how you can begin investing with as little as $10 and still build wealth over time. This isn't a get-rich-quick scheme. It's a real guide to smart, low-cost investing anyone can follow step by step. So if you're ready to take control of your financial future, let's dive in. Hey everyone, welcome back to the channel, where we break down money, investing, and wealth building in simple, everyday language. If you're new here, I'm your name, and every week I help people like you learn how to master their finances without all the Wall Street jargon. If you want to grow your money the smart way, without needing a big salary or financial degree, hit that subscribe button and let's get started. Why start now? So, why start investing now even if you don't have much money? Because of the magic of compound interest. Let's say you invest $100 a month with a 7% annual return. That's the power of starting early even with small amounts. Waiting until you have more money just delays your wealth building journey. Start now. Start small. Just start. The basics of low-cost investing. Before we dive into the actual tools and platforms, here are 4 core principles of low-cost investing. Start small, but be consistent. Keep your fees low. Even 1% in fees can eat away at your long-term returns. Diversify. Don't put all your money into one company or sector. Be patient. Investing is a marathon, not a sprint. Now, let's look at the best low-cost investment options you can start with today. Option 1. Index funds, ETFs. Let it be this. Index funds are your best friend. An index fund lets you invest in hundreds of companies at once, giving you instant diversification. Take the Vanguard S&P 500 ETF. For example, it tracks the 500 biggest companies in the US APL, Google, Amazon, and more. You can start with just a few dollars. The fees are tiny, usually less than 0.05% annually, and you don't have to be a stock-picking genius. You can buy index funds through platforms like Fidelity, Vanguard, Schwab, or even apps like Robinhood and Weep. Option 2. Fractional shares. Don't have $3,000 to buy a full share of Amazon? No problem. With fractional shares, you can invest as little as $1 into your favorite companies. Apps like Robinhood, Fidelity, SoFi, and Public allow you to buy just a piece of a share. So even if Apple is trading at $180, you can buy $5 worth today. It's a perfect option for beginners building a diversified portfolio without needing tons of cash. Option 3. Robo-Advisors. If you don't want to manage your own investments, let a Robo-Advisor do it for you. Platforms like Betterment and Wealthfront create a diversified portfolio for you based on your goals and risk tolerance. They invest your money in a mix of ETFs and automatically rebalance your portfolio over time. And the cost? Usually around 0.25%, way lower than traditional financial advisors. Option for high-yield savings accounts. Now, technically, this isn't investing, but earning 4 to 5% interest in a high-yield savings account is a smart move for your emergency fund. Instead of letting your cash sit in a checking account doing nothing, park it in a high-yield savings account from banks like CHL Bank, Sophie Marcus, by Goldman Sachs. You earn money while keeping your cash safe and liquid. Option 5. U.S. Treasury, I-bonds. Want something ultra-safe with inflation protection? I-bonds are issued by the U.S. government and currently offer returns much higher than a regular savings account. They're low risk, great for beginners, and you can buy them directly from treasurydirect.gov. You're limited to $10,000 per year boot. They a great way to preserve cash with some growth. What to avoid as a beginner? Quick warning, avoid these beginner mistakes. Don't chase meme stocks or crypto. Just because everyone else is, don't invest money you need within the next year. Don't panic and sell when the market drops. And most importantly, don't try to time the market. It's better to stay invested and let your money grow than to jump in and out trying to guess the highs and lows. Sample $100 portfolio. So, what does a smart $100 beginner portfolio look like? Here's a simple idea. $50 gives S&P 500 ETF, like VOO. $25 gives fractional shares of your favorite companies. $15 gives into a Robo-Advisor account. $10 gives I-bonds or high-yield savings. It's diversified, low-cost, and built to grow long-term, so there you have it, low-cost investing options. You can start today. Even if you're on a tight budget, the earlier you start, the more time your money has to grow. So don't wait for the perfect moment, just take the first step. Let me know in the comments. What's your first investment going to be? Like this video if you learned something new. Subscribe to the channel for more simple, no-fluff finance content every week. And remember, wealth isn't about how much you make. It's about what you do with what you have. Thanks for watching, and I'll see you in the next one.